think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies. I'm your host, Daryl Thomas, and today you are in for a treat. You are receiving exclusive content from the New Orleans Investment Conference. I had the opportunity of interviewing multiple experts within their respective field in the finance and resource sector. So be sure to hit the subscribe button. Take a look at this statistic. Over 91% of people that have watched my channel over its lifetime have not subscribed. So hitting the subscribe button only takes a second, and it is free to you. And for me, when I put out this content, it costs me money and time. So I hope that you all understand that and hope that you consider hitting the subscribe button. So without further ado, let's get to the interview. Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today we have the man himself, Brien Lundin, with us in the flesh. He is here. He's put on this great conference with his team. And so how you doing?
I'm doing great. This is the third day of the conference. Everything's going, as far as everybody else is concerned, very smoothly. We've had a few hiccups behind the scenes, but it's all been worked out, and we've got great content, wonderful speakers, a big, excited crowd. Very happy of how things are going right now.
That's good. That's good. So how long does it take you in preparation for this? Like we don't really see that. We just see the event like
all year long and then some. We're signed up 2 years out in the hotel in this facility. So we've done some work for the conference already 2 years from now. But yeah, it takes a full year. We work out our speaker agenda throughout the year, but it's pretty much set. We have a standard format, and then we fill in the holes. But our speakers are about 80-90% set up, and the agenda's about that much completed by about midsummer for a fall event. So we do plan ahead. There are always hiccups. I mean, even as we're here, we're making changes to the schedule as we have availability shifting and even in some cases some new ideas. Mm-hmm. So it is something that keeps you on your toes, but I've got a great staff. My primary job here is walking around and looking busy, frankly, because everybody's got it under control.
Mm-hmm. That's good. That's good. So You have some amazing speakers that came on. What was kind of behind the selection process for this year? I'm sure it probably changes year to year.
Yeah, I am the selection process, basically. So I've been doing this for an awful long time, and I've seen and heard thousands of people present at our conference and other conferences. I read everything out there. I watch all the videos I can of people and on social media. And so I have a good idea of who's really presenting thoughtful arguments, insightful analyses, who's got a good handle on what's going on. I don't have any kind of, message or theme. I disagree with some of our speakers, either, mildly or here and there. An example is Brent Johnson who has that dollar milkshake theory. I invited him for the first time a few years ago because I thought he had an argument that I didn't agree with, but it was well thought out and something people should hear. Over the years, I've pretty much come to agree with him. Mm-hmm. So he's a really smart guy. And that's kind of the key. The speakers at our event are really smart, and there's a lot of exceptional, extraordinary things happening in the markets, and I think that brings out extraordinary people to really explain what's going on. So yeah, I go out and find my dream team and see if they can make it.
That's good. Yeah, it's good to always so we're not in an echo chamber,
right?
To bring a contrarian perspective out, and such and so.
Absolutely. Yeah.
So yeah, that's really good. So we've talked a lot about gold at the conference, the macro environment and such, and so you receive a lot of information from like a lot of different sides of it. We received a lot of information. How do you determine your own view of on the economy or on precious metals?
I guess it's just years of watching the markets and following them on a daily basis. And it's not just, I write and publish gold newsletter, but to really analyze what's going on with gold, you need to know what's going on in the broader macro economy, what the big drivers are. So it's really just watching the markets on a daily basis, reading a lot of watching a lot of what our speakers put out, and forming my own opinion that's been shaped over a lot of years in the markets.
So gold mining stocks have been down quite significantly, but I mean, that seems like a more bullish case for it, that a lot of people have washed out. People are just kind of forgetting about it and such. And so I personally just think that there's going to be a huge bull market in gold. I think these stocks can go significantly higher. I mean, it just seems like, with, obviously the debt, the deficits of the government, all these things are just lined up, like the dominoes are lined up. It's just a question of when it's going to happen. So
I would agree with you. The mining stocks, of course, depend on what's going to happen with the metals themselves. And the markets don't really care. I mean, the gold price right now is within a few percentage points of an all-time high, and you would think that would be enough to really light the fire under the mining stocks. But investors in the markets don't get excited about where a price is. They care about where it's going. So we need not only a sustained uptrend in the gold price, but we need one for the right reasons. And right now, there's a belief that gold's being moved by the crisis in the Mideast, a geopolitical event. And the market doesn't place much faith in that, because these things, they come and go. You get a spike and it falls right back down. So nobody believes this has any lasting power to this move. But there is something going on behind the scenes. We see that treasury yields are rising when they should be falling, although the last few days it's kind of reversed. But what we're seeing is that there's just a lot of new debt that has to be financed by the Treasury and the Fed over the next few months. There's a lot of debt out there in the world at large that needs to roll over and be refinanced at today's rates, rather than when the debt was entered into at zeroed interest rate levels. A lot of it's coming due and has to be refloated at current rates. So there's a big change ahead, even if there's not something breaking in the economy because of the tightening by the Fed. The cost of this new debt is coming no matter what. It is a massive tidal wave about to hit the shore. And that alone is something that I think is going to create a lot of havoc and volatility that's going to tremendously help gold.
Yeah, that's good. So what do you look for? And there's a lot of different mining companies here, exploration companies, royalty and streaming. Which one of those do you prefer, or then what do you look for in a company whenever you're?
There's a lot of different types of companies, and there's a place in most portfolios for a little bit of everything. But right now, there are companies out there that have already drilled off a gold or a silver or copper or some other resource, and you can see what they have. They might have some economic projections on the resource. They may just have a lot of that metal already because they drilled it off and they know how much they have. And you can look at the value of that resource in just a normal market, not a real hot market, but just a normal market, and see that resource should be selling for or be worth 4 to 5 times what the value of that company is right now. So there's a bunch of those out there right now. So you don't have to take the risk of a company that's just exploring and drilling holes and hoping to make a big hit, which is normally where you get a company that could go up 4 or 5 times in value. You can find companies that have already found something and that get that kind of upside potential with these companies with a whole lot less risk. So it's a very rare opportunity that we're faced with right now. And there's really just a bunch of these companies out there right now. And
are you referring to? I learned about it was one of the curves.
Lan Curve.
Yeah. Mm-hmm.
So the Lan Curve basically points to, tracks kind of the share price of a mythical company or typical company. And you can see that if they make a discovery, the share price goes up immediately. It makes a very profitable spike for anyone who got in down there. Then they'll drill and they'll drill and they'll define the deposit, then they'll start to develop it. And you'll see that there's a long period where they're not getting exciting new drill results. They're not making that kind of discovery news. And the share price will come down for a long period until they're just about ready to start pouring gold or silver or copper or something. Then it'll start perking up because a company that doesn't make money is about to start making money. So there are those two periods where you can really profit in the lifespan of a discovery. Right before the discovery is made and as they start drilling it, and then right before it goes into production.
And at some point, usually the big miners will come in and accumulate.
Yeah.
I mean, I don't know how often that happens, but
for a big discovery, quite often, because typically a junior mining company, exploration company, doesn't have the talent, the skill to create a mine. It's two different things to build a mine and operate a mine. And it's a whole nother thing to have your geologist try and interpret, well, there might be a big discovery here and drill it off. So if there is a big find, then typically that junior mining company will either sell that project to a major company that can put it in production, or gets bought out by the major company. And that's where you get your real wins, when you go from a very small valuation, drill it off, and then you're taken out by a major company.
I mean, the gold price keeps hitting this resistance level,
Yeah.
A little over 2,000 or whatnot. At some point, I think it's going to break through, but it's probably frustrating for.
Yeah, it is frustrating. Yeah.
What kind of is helping you through this? I mean, through hitting that resistance line, coming back down. And so.
There's a couple ways to look at it. I'm not much of a technical analyst. I don't do charts that much. There are a few things that I've learned over the years that work for me. And that triple top where it's hit about 20, 50 or thereabouts 3 times and hasn't gone any higher. Some people view that negatively, except for the fact that we've had a really long kind of bottoming pattern in the gold price that's created a long multi-year cup. And in that cup over the last few years, we've had that triple top. So it's gone kind of sideways over a few years. And that's called a handle to that cup. And that's a classic technical formation. And if you look at a long technical formation like that and plot out what that points to, and it projects a gold price of $3,000 at least, $3,000 or more. So it's a very powerful thing on the charts that you can look at, and it's one of the places that I look at and say with some level of confidence that it's very probable that gold's going to go much higher. The other thing is just looking at all the fundamental factors out there, the monetary factors, and knowing that the Fed is going to have to start loosening monetary policy for any number of reasons, primarily because we can't afford to pay off debt at these rates.
Yeah, the interest expense, and I mean, there's a lot of people, average citizens are hurting with the higher interest on the credits and the mortgages, and it's just not good.
No, and it's killed off the housing market. But there are a lot of companies that could barely pay their debts, only making enough money to pay their debts by the barest margins for years when interest rates were at zero, and those were called the zombie companies. Anything like 20% of the companies in the United States were zombie companies. They could barely afford to pay their debt. But when that debt gets repriced at current interest rates, they're going to go bankrupt. So that's going to hit, regardless of anything else that happens.
Yeah. There's been a lot of talk about the commercial real estate market.
Yeah.
What's your take on that?
Dead as a doorknob. It is a combination of the pandemic and the whole work from home thing has pulled people out of office buildings, and the fact that you have these interest rates that can't fund new developments. And the same thing goes that you'll have debts and mortgage on some commercial properties rolling over at current interest rates, and it's just not sustainable. If you take away the business, the renters from the property, and you have to pay more on your mortgage at the same time, it's a bad combination.
Yeah, definitely. That sounds very concerning. So let's say gold goes to $4,000 an ounce. What's the first thing Brien is going to do when it hits that price?
Depends on how quickly it did that. If it does that over a period of a couple of years or more, then there'll be a lot of opportunities to make money along the way. I would say that out of the too many companies right now in my portfolio, junior mining companies, if we get to $3,000 or $4,000 an ounce in the gold price over the next 4 years, I think at the end of that period, you will see none of those companies in my portfolio. Hopefully I would have sold them, and you'll see them have been replaced 2 or 3 times over by other new companies. You have to seriously get into portfolio management. You have to discipline yourself in that kind of environment to take profits and take them out of the market and get them into something illiquid. Otherwise, you'll throw them right back into another play and another one, and you'll never end up getting anything in before you have a correction in the market.
Mm-hmm. How would you reward yourself, for the patience, through the sweat, the blood, sweat, and tears of waiting this market out? How would you reward yourself in that situation?
Well, the last bull market, from 2000 to 2011, I took the profits out, bought a home, bought a couple of other properties, and one on the beach, one in the woods, and basically got that money out of the market and got into something illiquid. But it is a cyclical market. So when times are good, and the good times are coming again, you need to focus on making those profits and then taking some out of the market. You still want to be in the market, let it reward you, but you don't need to keep plowing it all back in. You don't want to be greedy. You need to take it out and put it in something that's fairly illiquid.
Mm-hmm. So, and these are more pertaining to the stocks, not necessarily the insurance for your money.
Exactly. The other reason to buy gold and silver is as insurance, because you know that the dollar is going to depreciate. You can insure against that thing that you know is going to happen. And that's by buying gold and silver. That preserves wealth even as the purchasing power of the dollar depreciates.
Yeah, that's Rick. He always says it helps him sleep at night.
Yeah, that's exactly right. If you have a significant amount of money into gold and silver safely put away, you're opting out of the system. You're not going to be a victim of the system any longer. You're not going to suffer that ongoing. The Federal Reserve says, well, we're going to we're aiming for 2% inflation rate, and that's a good place to be. And the question to them should be, why do you want to increase people's cost of living 2% every year? Well, they want to do it so that they can still have these levers to pull on the economy, because they don't trust the economy to progress on its own and heal its own wounds and self-level and they just don't trust free markets without some PhDs kind of guiding it along. Mm-hmm. So the price we have to pay is at least 2% every year, increasing the cost of living. We know that's just what the government tells us. We know it's a lot more than that. And then we have times like recently where it gets up to 8 or 9%. And that really is a killer for people, because you just can't keep up. But gold will shield you from that. What you put in gold will retain its value despite that inflation.
Yeah, definitely. So we're here at the New Orleans Investment Conference. People can still access the live streams and such. And so do you have anything to share on that with the audience?
The live stream, yeah, they can sign up at neworleansconference.com. And it's a great value. It gets you won't be able to see all of the conference live right now, but you'll be able to see the rest of the conference live. But you'll also have access to all of the recordings, the transcript, which is over 300 pages of the written, transcript of everything that was said from the main stage. You'll even have access to previous content. So it's an incredible amount of knowledge and insights. And it's at a very low cost.
Yeah.
I don't remember what the cost is, but I know it's very affordable.
Yeah, definitely. We'll leave a link in the description below. I actually was able to grab one of the DVDs.
Oh, good.
With Milton Friedman and some of the old recordings. And so,
good.
Looking forward to watching that. So
wonderful. I'm glad you got some.
Well, appreciate you for coming on, Brien. This is an amazing event, and looking forward to next year.
Glad to have you this year, and looking forward to having you back next year.
All right.